Ladies and gentlemen, welcome back to the channel. Tesla stock today was up over 1%. It was quite a good day. We had some surprising news come out. Elon Musk shared that there's going to be some kind of big announcement coming towards the end of this year, while also Tesla potentially taking a stake in XAI and many other developments on the day today. That, in a nutshell, is why Tesla was up. Now, here in this video, we'll go over some more breaking news, some more headlines, all of that, but we're going to take a big focus on tomorrow's CPI report because tomorrow's CPI report is very important. This is the first report in which a lot of Wall Street and a lot of Fed policymakers are expecting tariffs to show up in the inflation numbers. So it's absolutely critical. We'll get to that in just a moment. But first things first, hit that like button and subscribe to the channel if you have not done so already. Secondly, check out the link down below in the description of this video. Let me give you a 30-second rundown of what we're doing over there. We're going out and finding the quality small cap companies. I like to say 97% of small caps are garbage. You shouldn't invest in them. But 100% of the successful companies today were once small caps, meaning there is a lot of opportunity in small caps if you can identify it and invest in it early. For an example, Novartis Semiconductors, I bought that at $2. It's $7, $8 today. I bought Nebius at $17. Today it's $51. Okay. I bought IONQ at $7. Today it's in the 40s. Okay, these were all just within the last couple of months. Applied Digital at $3. It's $15 today. By doing this, the one core principle strategy of what we are doing today, and that is finding information disparity, finding where we can see the news and know what's going on with the company, but it's not fully appreciated by Wall Street. Two reasons this happens. Number one is because some of these companies are too small for a lot of Wall Street to invest in, like sub-billion-dollar companies. Okay, that's number one. Number two, if these stocks, these small caps, do not have retail investors that are at large backing them. I look at YouTube. I'll type in tickers on YouTube to see if people are making videos about them, pumping them. I'll go to StockTwit, see if anyone's talking about it over there. I will go to Reddit chat rooms to see if there's any conversation over there. I will go to X and see if anyone's talking about these stocks over there. And when I can identify an opportunity that nobody else is talking about, that is exciting. We are taking a focus on really 3 or 4 different areas right now. AI, number one. Energy infrastructure is another theme, and some of the small cap names I think can be very successful. Robotics, as well as crypto. Okay. Those are the 4 areas. Well, 5 if you include biopharma. We have quite a bit of biopharma as well. These are 6, 12, 18, 24-month time horizons. They are not day trades, although we do day trade a bit of options as well during earnings season. That is, I think, the best strategy for this market right now. Check it out, link down below in the description of this video if you have not done so already. And let's get into this episode. So first things first, I just want to say over this weekend, we had some news, okay? We had news that Trump is planning on imposing a 30% tariff on Mexico and the EU if they do not come to a trade agreement within the next, 2 weeks or so, by August 1st. So that is not exactly the greatest headline. What did stocks do? They brushed it off, okay? What was the big negative news today? That Trump, by September, is going to implement 100% tariffs to countries that do business in buying Russian oil. That's China, that's India, that's potentially Brazil, that's, some of the most important companies we do trade with, especially China. This today, largely brushed off. I will tell you, though, here's one thing you have to understand. I actually said this in the trading community about this news. Now, first and foremost, shout out to Task Force Talon over there. Incredible individual in the trading community, adds a lot of value and picks your brain quite a bit. So appreciate you if you are watching this video. But I say about this whole tariff, China 100% tariff on Russia thing, I wrote this in the chat today at 2:02 p.m. I said, I think these secondary tariffs would be really, really bad, potentially cause a deep recession if they were implemented, specifically on China. Here's where we have to kind of read Trump. Does Trump want a deep recession? I don't think so. Will Trump be willing to push it right to the edge? Yes. So September is too far away to sell everything and get bearish. But we can see Wall Street today buying the VIX a little. So we want to watch the headlines in the coming weeks. But for now, it's too early to be outright bearish. I'm a fan of selling some positions that have went up a lot, like trimming a little on big gains. So right now, by all means, if you have stocks that are up a lot that you bought on the April lows, I wouldn't blame you at all for taking a bit of profits. But is this the time to like turn bearish on the markets because of some of these comments from Trump? No, it's too early for that. Okay, things can change, and they will change, right? But just like I said, would Trump be willing to take it to the edge and actually implement a 100% tariff if on China, let's say, if the war in Ukraine did not end? Potentially, right? Which could definitely have negative consequences. But odds are Trump does not want a deep recession. That's what I want to really hammer home in this segment of the video. The odds favor that Trump is just trying to, fix the situation, not hurt the economy. But Trump is willing to take it right to the edge of financial disaster, which that edge of financial disaster would come closer to September. So we're midway through July. We have to get through August, then to September. So there's a fair bit of time, and I think that's partially why markets did largely brush off the comments made today by Trump. You actually seen something very interesting that happened today, okay? You've seen the VIX go up 4.88%, but you've seen the Russell, the leading index. Second leading index was the NASDAQ. So you had a risk-on day where Wall Street bought small caps, but also bought protection in portfolios. Not too often do you see this. So it's a little bit of a heads up, like, okay, Wall Street cares about these retaliatory tariffs on, China, 100%, those countries that buy oil from Russia, but it's just a little early to outright get bearish on that. That's kind of what this dynamic today screamed to me. So that's going to take us into the next segment of this video, CPI tomorrow. Here's where we really have to try to understand this, okay? From a general perspective, Wall Street expects, even if you're a bull, like a bull on inflation, you don't think inflation is going to be a problem, like Fed Waller, Fed Bowman, right? They are advocating for cuts in July. Even they say that tariffs can cause a one-time price increase, okay? Keep that in mind. Well, we're expecting in June to see that one-time price increase. Now, whether that's 1 month or 2 or 3 months, I think you can kind of sum that in a general one-time price increase, okay, over the course of a couple of months, like a little spike in inflation, okay? So if we get a hot number tomorrow, you could chalk it up to, here's the one-time price increase from tariffs. It could also be the start of higher inflation if you are a bear. So a higher inflation report could validate the bulls and the bears tomorrow to say, hey, here's the one-time bump in inflation. And then the bears are going to say, oh, here's the start of a larger inflation problem. I've made it very clear I don't think we're going to have an inflation problem in this country. Here's what I said to the trading community today on that exactly. And also shout out to Investor Guy in the trading community as well. I said here there could be a sell-off tomorrow following CPI, but I think the markets would largely look past a higher number. Most people think tariffs can cause a one-time price increase, so it could be a kick the can down the road event tomorrow, meaning if we get a high CPI report, then people are going to say, okay, fine, we expected that, the one-time price increase. But what's the next month look like? Okay, that's the narrative going to be, is going to be if it's a high report tomorrow. Okay, fine. What's the next month going to look like? If it's a low report tomorrow, that's obviously going to be great, but it's still kind of the logic of, does that inflation show up in the next month? So I don't think we actually get anything settled tomorrow, but we can get a clearer direction, if you will, of, are we getting higher inflation from tariffs at all? Maybe. If we're not, then how long until potentially we do see that one-time price increase? I say here, I personally think tariffs are not inflationary because inflation always happens due to oversupply of money, aka money printing, which the way it works, the government doesn't just print money, they sell debt, they sell bonds, and then they print the money to back the debt, okay? The argument is tariffs will create a wage price spiral, and it's really hard for me to accept that. I think tariffs are just bad for growth and bad for the labor market. Companies won't be able to raise prices, so they will have to look internally. How can they offset higher costs from tariffs? Number one, become more operationally efficient. There's obviously like a million ways to do that. Number two, lay people off. And number three, they can raise prices, but risk losing market share to other companies, since not all companies will raise prices. If Nike makes their products in China and raises prices, fine. But if a competitor to Nike makes their products in the US and can undercut Nike's pricing, Nike's going to lose market share over time. That's not a good proposition for Nike. Okay? You'd rather become more operationally efficient or lay people off internally in your business to protect margins versus losing market share. Losing market share is the slow death of a company. I say that's just my thesis. I could be wrong, but I don't think the consumer is very strong. And that's the other side. If the consumer is not willing to pay higher prices, you cannot see inflation. So I think tariffs, inflation is really just bad for growth and bad for the economy. And I think that's kind of the logic that broader markets will start to follow. So tomorrow's CPI report for core, month over month, you're expecting 0.3%. Last month was 0.1%. Okay, so you are expecting inflation to rise tomorrow. Typically, when we have a data set that already has high expectations, it's more likely than not we come in lower than the high expectations. It's going to be pretty shocking if we come in at like 0.4%, like because expectations are already high versus the results of CPI that we had last month. So this is the report for June. This is, again, a lot of what Fed speakers have said is going to be the first month that we see the CPI reflect tariff increases. Now, core year over year is expected to rise from 2.8% to 2.9%. Month over month headline is expected to rise from 0.1% to 0.3%. And headline year over year is expected to rise from 2.4% to 2.6%. So you're expecting a rise across the board. Now, New York Empire State Manufacturing Index expected to come in not as bad as last month, so that could be good. Fed Bowman will give a speech at 9:15 in the morning. Fed Barr at 12:45 a.m. tomorrow or p.m. Fed Collins will speak as well at 2:45 p.m. Fed Logan will speak at 7:45 p.m. So the inflation numbers could very well dictate what kind of tone the Fed takes. If we get a low CPI report tomorrow, like 0.2%, or in the best case scenario, 0.1%, the Fed is going to turn decisively bullish or more dovish and be more open to cutting rates. That I can tell you with a fact, with a certain degree of certainty. Now, later on this week, we do get PPI on Wednesday, expecting a rise in producer prices as well, which is interesting because typically PPI goes up and then CPI goes up. PPI month over month last month was 0.1%. We're expecting that to rise to 0.2%, but CPI is expected to rise from 0.1% to 0.3%. So you're expecting CPI to outpace PPI, which is not really in line with what we've heard from companies. And then on Wednesday, we get the Fed Beige Book, more Fed speakers. On Thursday, big data here with retail sales. You're expecting a pretty rough number on Thursday. Again, just to highlight, the economy is not that strong. Like, we're not in recession, but by most metrics, we're running below trend, right? We're at like 1.5% GDP. We're not at the 3% GDP we were running at in 2023 or 2024. So the economy has definitely slowed quite a bit. And I think tariffs are directly negative to the labor market and to economic activity versus inflation. Because, I mean, we had inflation in 2021 because there was a slush fund of money in people's bank accounts. Today is not like that. People are not willing to pay higher prices, and companies will not be able to pass on higher prices without losing market share. That's the bottom line. And again, any slow death of a company starts by losing market share. No company becomes unsuccessful if they continue to grow market share, right? If you continue to grow market share, you're gonna win. It's when you start to lose market share that your business typically is on a downward trajectory. And so I think that's why tomorrow's CPI report is so critical for markets. While it's hard to say exactly what's going to happen from a stock perspective, I do think the risk is tilted to the upside, because whether we get a bad report or not, say we do get a bad report, Wall Street's going to say, okay, fine, one-time price increase. What about the next month? Okay. If we get a really good CPI report, Wall Street might say, okay, there's no inflation from tariffs. Like, we don't have an inflation problem. Great. The Fed gets more dovish. There can also be the scenario where we do get a low CPI report, but the Fed still takes a more, wait and see approach, that Wall Street says, okay, tariffs have not hit yet, but what about next month? So I think the general narrative is going to be, okay, fine, we had XYZ number, but what about next month? And when you're kicking the can down the road is not typically a bearish event for markets. We were kind of doing that with CPI in other prior periods, and it was never really a big downside catalyst, a hot number or a low number, when that narrative is, what's the next month going to look like? Okay, hopefully that makes some sense. So that's kind of my overarching thoughts here. And in the kick the can down the road scenario, especially if it is a CPI report on the low side, can definitely foster a more risk on appetite in markets. And seeing the risk on appetite today with the Russell outperforming is a pretty good sign that tomorrow could be a continuation of strength in this market. Now, according to CNBC, Trump will end the student loan payment pause. Now, this is interesting. Normally, I don't report on politicians and what kind of, trades they're making, but Lindsey Graham has disclosed new stock trades. Now, I don't really care about the first two here. This one's interesting though. Up to $100,000 in US Treasury bills. When we get CPI that comes out tomorrow, that's fascinating. Why? Because there's an inverse relationship between yields and prices. So for an example, when 10-year Treasury yields are 4.5%, okay, that means the price of bonds is low relative to what we've seen in the past 10, 20 years, because yields are high. So from Lindsey Graham's perspective, he's locking in a high yield. But where you get the capital gains on bonds is when yields fall, bond prices go up. So it's kind of a trade to say, hey, we could get lower 10-year Treasury yields. Long duration yields could come down over the foreseeable future. That's what he's basically betting on here, which yields falling is typically good for risk on. And Trump to unveil $70 billion in AI and energy investments. Again, I think this is a theme that's going to be around for decades to come. AI is not going anywhere. And over the next 12, 18, 24 months, I think, the companies that actually apply AI are going to be the real winners. I think that puts Tesla in a lead position at this point. When you think about total addressable market size of Tesla's AI projects like Optimus and Robotaxi, there's nothing bigger than that at this point. That is pure AI. Right? Everything about it is pure AI. There's no bigger AI company than Tesla. And I think there is a market disparity between, what we believe and what Wall Street believes. We believe there's going to be thousands of robotaxis out on the road next year. Wall Street believes there's going to be hundreds. Okay. We believe Optimus is going to be a smashing success in the years to come. Wall Street doesn't even think about Optimus. So Tesla's a little bit of a weird company from that perspective, where there's kind of information disparity, kind of like what I'm doing with small caps, is finding the value, finding the stocks that Wall Street does not quite know about yet. But Tesla is one of those companies that Wall Street just doesn't quite know of yet. They don't understand Tesla. They don't know what Tesla is growing into, although we do. So let me know your thoughts on this down below in the comment section. Let me know your expectations for tomorrow as well. I am bullish heading into tomorrow. I wouldn't be surprised if it's, up 0.5%, down 0.5% kind of day. I'm not expecting like a huge down day though. Not really expecting a huge up day either, unless we were to get like a really good number on inflation. Kind of comes in line with expectations, maybe a little bit lower, a little bit higher. it's not the end of the world in both either direction. So let me know your thoughts on all of this down below in the comment section. Ladies and gentlemen, have a great rest of your day, and I will see you in the next one.